Welcome back and thank you so much for staying with us. You are watching Amka Kenya and this is Amka Vibe Check. And this morning we are speaking about insurance. All you need to know, all you want to understand, and we want to make it as realistic and, as basic, as palatable as ever so that you can be able to give us your perspectives on the same. And with that note, we do have our question of the day in regards to this conversation. Like I mentioned, we're highlighting insurance. What are your questions? What do you want to know? This is the time, of course, that you will be highlighting those perspectives. And we are asking you, what are some pressing questions you have about acquiring insurance in Kenya? What are some pressing questions you have about acquiring insurance in Kenya? Would love to know your perspectives on the same. Remember, our WhatsApp line is right there on your screen, and our handles on X and Facebook are at K24TV. They're basically the same. So remember, the question is, what are some pressing questions you have about acquiring insurance in Kenya? So anything and everything you want to ask about your claims, about if insurance is mandatory and why is it not doing so well in Kenya, right? All those things you can ask, because my guest is actually quite suited for this conversation and he's happy to articulate it in that particular manner. Now, my guest this morning is Mr. Kalai Muse. He's the Director, Supervision, Insurance Regulatory Authority, and that is IRA. Mr. Kase, or can I say Kalai?
Kalai, yes.
Kalai is better.
Yes.
Thank you so much for being here and, of course, indulging us, because it's a very critical thing. Kenyans have these pertinent questions. Insurance makes people very sensitive in one way or another. So let me begin here. It's quite popular, right? But we have a very small penetration in Kenya. We have the penetration being at 3%, meaning people know about insurance, but they're not getting it more than other African countries. So I want to understand why. Please elaborate for us.
Thank you, Remy, for having me today.
You're welcome.
To talk about this subject, which is very passionate to me, about insurance. Insurance is a very important aspect in our lives for all of us. All of us need insurance. Why? Because it deals with the risk, and we are all exposed to risk in whatever we do. Every time you do whatever you are doing, you are exposed to risk, and you need a mechanism to take care of this risk. And that's why we need insurance. About penetration of insurance, I need to make some correction. The penetration rate for insurance currently is 2.45%.
Yes, below 3%.
Yes, but what does this mean? I think that there is a mistake people make, because I hear people asking me, where is the other 97? There is no other 97. Penetration is usually our contribution to GDP of the country. How much do we contribute? Right. The best contributor to GDP is actually agriculture, at around 24%. So insurance, our aim is to make it at something like 5%. If we can make it 5%, that will be excellent. That's actually our aim, if we can contribute 5%. So we are almost half of what we need to be. So I agree it is low. It's actually one of the best in Africa. World average is...
One of the best in Africa? Yes,
it's number 3 in Africa.
Okay.
Yeah, world average is 5 to 6%. The best is around 15% in the world.
But
which
why
is
is
South
there
Africa.
so much...
but I need to talk about what you wanted to mention, because there's something we call coverage. Coverage is how many people have insurance. And in Kenya at the moment, it's around 37%. 37%. Now that's looking at how many people have insurance. So it's just about 37% of Kenyans who have access to insurance. And that is where the problem is.
Right.
That is definitely low, because 37%.
It's not
it's low.
a high
So
number.
that explains your issue.
Okay.
Yes.
So then the question is, why the apathy? You know, why do we have, like you mentioned, people know about it and the contribution to the GDP, but we also do not have many people, you know, scrambling to get insurance, despite the fact they know their risks and other factors?
I think there are many factors. Insurance follows economic development. If you are not doing well economically, insurance will not be your priority. So insurance can't work on its own. It works together with the national economic development. If people are doing very well, you find a lot of them now are accessing insurance. But the other problem is, and it has been said many times, that insurance may not be affordable to many Kenyans. And as an authority in 2020, we developed some regulations called the micro insurance regulations. Micro insurance means insurance which is accessible to those with low incomes. So we have regulations in that respect, and so far we've licensed about 5 companies specifically for that, not doing the other insurance business, to just develop products for the low income citizens.
All right.
Yes.
So let's break it down.
Yes.
When you say by those people who are not doing well, you know, in terms of their income, what standard are we looking at? For those who do well, what category of Kenyans are we looking at? And, you know, what is their, you know, take home for that matter? And for low income, now what you're catering for, what is also, you know, that perspective? How does that look like? Break it down for us.
This is actually how it has been done in the regulations. It's not in defining the people. It's in defining what products suit them. For example, it says the product should not, the premium should not be more than 40 shillings in a day. So it's less than, if you are paying 50 per day, that's not microinsurance. Not everybody can afford that. So it's less than 40 shillings per day. That's what you are calling microinsurance. And the sum assured should not be more than 500,000. That is what we are calling microinsurance.
Right.
And it's very clearly defined in the regulations.
Okay. So let's take a look then at the perspective of challenges.
Yes.
Because you said in that perspective, yes.
Yes.
But there are people who would still not be able to articulate, okay, so now with 40 shillings,
yes,
how am I going to, you know, use this particular aspect of income, maybe per day?
Yes.
Right?
Yes.
To get myself insurance, right?
Yeah.
So I want you to paint it in a very realistic manner, you know, how some of these challenges look like, you know, as to why someone may not be scrambling, like I said earlier, to get.
Yeah, so what is going to happen? These insurance companies are going to develop products. It is, for example, medical products. For some people, 10,000 shillings medical bill can return them to zero economically.
True.
So the insurance company may now come up with a product and say the premium is, you just pay 10 shillings every day as you do your work, so that if you are hospitalized, we can pay you 10,000 Kenya shillings for medical expenses. It is as simple as that. Yeah. So it is the insurance companies which will develop products where the premium should not exceed 40 shillings every day. And you see, we are talking about every day because the people at the bottom of the pyramid may not afford this annual premium or monthly premium. So we want to make it very flexible. You should be able to pay even daily premium.
And that's the mandate of the insurance bodies for this?
Yes, yes. The insurance companies are supposed to develop products.
Okay.
Yes.
Now, we also need to look at, you know, this highlight of the jargon. I'm sure you've heard.
Yes.
You know, that insurance companies can come and start explaining to you the different premiums, or you're supposed to get this cover for this. But it sounds like a lot of English that you cannot decipher, right? So for a regular Kenyan who is now interested in saying, okay, I want to get insurance for that matter, what are they supposed to look out for? How are they supposed to tell these people? Because yes, they're trained to be able to articulate it, but we've seen many times that is not the case, right? So help us understand, especially with the jargon, what am I supposed to expect when I want you to explain to me about, you know, these different factors?
Okay, the first thing to start is, if anybody comes to talk to you about insurance, make sure they are authentic. How do you ensure they are authentic? Let them show you their license, that they are licensed by IRA. We start from there. Because for us to license anybody, they must go through some training, some basic training, at least certificate of proficiency, for them to be able to explain insurance to the clients. That's the first thing. So this person is licensed. Now, you start the discussions. These days what we've done is even the policy documents, we've actually looked at the language in those policy documents. I know it used to be very legalistic and, but we have actually come up with a standardized wording, which is plain language, English language, very clear. We have even worked on the fonts, so that it's not very minute fonts. The fonts are clear and everybody can read and understand. And we have what we call market conduct regulations, where the person selling to you is expected to explain the details of the product to you before you make a decision. They must explain those details to you very clearly, and you are even given an opportunity once the policy is issued, because at the end you come to you, you get a policy, then they will take that information to the insurance company for the purpose of issuing the policy document. You are given time. In fact, like for microinsurance, you are given 45 days to look at that document. If you are not happy with it, or there is something you don't understand, you can even say, no, I don't want to continue with this, and sign off.
Right.
Yeah.
Okay. Yeah. Another critical thing is the question of mandatory, insurance.
Yes.
When it comes to, car covers, for that matter, health and the like.
Yes.
So if you go on your Google search, one of the key questions is mandatory insurance a thing in Kenya, and it's quite a frequent question that is asked because for some, they'll even say, okay, I was selling my car.
Yeah.
Do I sell it with my insurance? Can someone else, is it transferable, rather? So I want you to be able to paint those pictures for us so that, we know, okay, you do not transfer your insurance. Someone else needs to get new insurance, but that seems not to be clear for some people.
Okay, it's good to explain what mandatory means. Especially for motor, because it's the main mandatory class of insurance business. Why is motor insurance mandatory? You see, when you are driving your vehicle, you will injure somebody, a third party. What the government has put for mandatory is protection of that person whom you may injure, not you. You, if you want, you can buy your comprehensive and everything, but you may injure somebody. That person you may not be able to pay that person. For example, the limit is 3 million. If you injure somebody, are you able to compensate them for the 3 million? Probably no. So you need somebody. The government wants to make sure that there is somebody who will compensate this third party. And that is where insurance comes. So that mandatory insurance is not to protect the owner of the vehicle. It protects the third party against those injuries.
So that's why we call it the third party.
That's why it is called that part. Now, can you transfer your cover? Insurance is usually based on something we call insurable interest. You insure your vehicle or your property because you have interest in it. Insurable interest is financial interest, that if it is damaged or it injures somebody, you are going to suffer. If you have sold your car, what interest do you have in the car? You have no interest. So your insurance actually ceases the moment you sell that car. The person who buys the car must get their own insurance, because they are now the ones with the insurable interest.
Okay.
Yeah, it is as simple as that.
As simple as that.
Yes.
All right. We also need to look at gaps for that matter. You mentioned something earlier as a regulatory body. Overseeing all other insurance companies we have in Kenya. We need to look at how do you fill in the gaps of what now other people may need. Right before we got to do this interview, I was telling you about covers for people in the diaspora, right? One of the main issues they've been having is my loved one passed on while there, and I need to transport their bodies back. right? Fly them, and then there's always the harambes that are done and the like, and it seems to be quite expensive, right? So those are gaps that need to be filled, and we do not have very many insurance companies, taking up that. So as a regulatory body, how do you ensure that the needs of the diaspora that are unique to them particularly are highlighted, that whoever it is may feel catered to, the family, the deceased, and the like?
Okay, Remy, one of the mandates of the Insurance Regulatory Authority is to promote the development of the insurance industry. Promote the development. We do not develop, we promote the development. So we give that environment for people to be innovative.
Right.
So people will see where the need is. For example, I know for many years we have argued about, I don't know whether you remember Garden Square and what used to happen there.
I remember
so
that.
We kept on asking the insurance companies, why do you allow people to go and meet in Garden Square every evening? The place is packed. Why don't you be innovative?
I think it became a culture.
Yes, it became a culture.
And
in fact, it's one of the challenges of the insurance industry at the moment. One of the reasons the penetration is low is because of that culture. Because I know if I get sick and I'm hospitalized, all I need is to open a WhatsApp group. And all of you, my friends, will contribute for me and I'll be treated. Why do I need to pay insurance premium? The culture itself is one of the problems we have in the development of insurance. But in the case you are talking about, people identified the need. There are some people who identified the need, the problems faced by people in diaspora, and they said, yes, there is a need here. They came and presented a case to us and said, we think we can offer some solutions to these people. And we get them an approval to try that.
Right.
Yes.
But now you've said about the culture, let me just circle back to that. There's also the issue where people would prefer that because it's familiar to them, because they're saying we cannot get our funds back. When we go, ask for our claims, they're having an issue getting that back. So when I'm opening my WhatsApp group with so and so and so and so, that is to them faster in getting any sort of help, remuneration, or whatever it is, right? So how do you also answer the question of the covers, which is also another big ask and question that Kenyans have?
The thing with insurance is insurance, it's not investment. It's not an investment that you are putting your money somewhere to get it back.
Do people have that, as a notion?
Yes, yes.
A big notion,
a lot
as
of people,
an investment.
Even for motor vehicle, I hear people say, I have not claimed for 10 years, so can you give me back my money? I hear that a lot. But insurance is not like that.
So how is that handled?
Insurance is not an investment. Insurance is sharing of risks. That is why you pay a premium of 10,000 to be paid a claim of 5 million. Where does the 5 million come from? The 5 million is what all of us, the other people, have contributed. So we all contribute to the few who will incur loss. So you should not expect to be given back your money. So the same way, if it's, for example, medical insurance, you expect there are companies who, if there is a death like the Garden Square issues, they pay within 24 hours. The moment you report that there is a death, within 24 hours, you get paid. You don't need a group for that, and you pay something small.
So in what cases then can someone have their claims looked into for that matter? Because I feel there's an issue also of sensitization.
Yes.
Like you said, if you believe that you have put in money for 10 good years and you come demanding, for some it's very clear. Yes. I need the equivalent.
Exactly.
Of this. So why am I not, getting this? So how do you articulate that? Because for some, there is a legitimacy to it, and for others they may just have no understanding whatsoever.
Can I give a very good example?
Right.
Assume we have 10 of us who have houses. Okay, let's say 100 of us have houses. Within a year, do we expect the 100 houses to burn down? Definitely no. But we have people called actuaries who can do their mathematics and tell you within a year, out of the 100 houses, we may get 5 of them burning down. You get it? And we know if 5 of them burn down, the cost of the 5 which are burnt down, for example, will be 100 million, for example. So the 100 of us, all of us, 100 of us, let us share this 100 million. Let's each contribute something small so that for the 5 who are going to incur a loss, they will be paid using what we've contributed. So during that year, we know our money will be used to pay the few who get the loss. The problem is it's a probability. We don't know who among us will face the loss. You get it? So we contribute for the few who will face the loss, and it can be any of us. So there is nothing left to be given back to you. So that's how risk works.
Right. So in a few words, you should not have the understanding that you can put money into insurance covers and get claims back. Like what is this confusion?
No. You know, claim is now for the few who incur a loss. If you be unlucky to incur a loss, you will be paid. For example, you pay 5,000 shillings per year and you incur a loss. Your house is 5 million. You are paid 5 million. Where has the 5 million come from? That's a simple question. It is what everybody else contributed. So those other people who did not incur a loss should not expect to be refunded their money because it was used to pay my claim. We are sharing the loss among ourselves.
And I think that is the issue because most people will be like, why would I then put my money into insurance when I will not be using it? Do I orchestrate an unfortunate emergency, quote unquote?
Yeah, but
others would think like that.
Yeah, but you can face a loss anytime. It's a problem. We don't know, but you may face a loss anytime, and that's why insurance comes in. It's a risk. It may happen anytime, and you don't know when it will happen. So if it happens, then you'll be paid your claim. If it doesn't happen, your money was used to pay for the other person whose claim, whose house burned down.
Oh, I can see why that would be a conundrum for many, because I don't think many people can even take in it even right now.
Yes, that's
what you mean. I'm putting in because there's a lot of money, like you said, that goes into insurance.
Yes.
Right. So if we're all contributing, even in this room.
Yes.
In that particular, let me just call it kitty, whatnot.
Yes.
There's a lot of money.
Yes.
So then how do you ensure the circulation? Because one of the aspects I saw is also collaborating with the government in different ways to ensure that the money is in circulation. I need you to articulate that.
Maybe before that, I can just point out, give an example for people to understand.
Right.
Let's go back to Garden Square. You've been to Garden Square 10 times, assisting friends, but you never had a death in your family. Will you tell those people, now I contributed, give me back my money?
So it's a culture thing, and that's what they do.
You can't ask back for, until there's a death, you will call them. But if there's no death, you can't tell them, give me back my money.
Right, but I don't think they tell them to give me back. I think they just expect their assistance.
But if there is no death, what do you expect? There's nothing.
All right, then. And with that, we're taking a short break right here on Amka Kenya. Do stay with us. We'll be back with more.